Right, joining us now is Paul Theron from Investec. Thank you so much, Paul, for joining us. We saw interest rate cuts by Mario Draghi. A bit of a disappointment that we didn't actually see a significant amount of bond purchasing, or at least the intention thereof.
I like the look of this guy. I don't know what you think of him. It's amazing to me. They have all these Europeans. I mean, his predecessor was the same. They speak fantastic English. They are so urbane. It turns out Draghi, of course, born in Italy, but educated largely in the US. Has a PhD in economics from the Massachusetts Institute of Technology. He worked for Goldman Sachs, for goodness sake. So, you know, he's
a real technocrat, essentially.
He's perfect. But, I mean, at first we were quite buoyed by the fact that this cut came through, because he basically has undid his predecessor's moves. But then, as you say, early indications of some quantitative easing, Euro style, all sorts of complicated stuff. But the market is now down, so I guess, you know, one or two of the comments were not seen as being kind of market friendly. So we're in the old washing machine again with, you know, trying to...
We've got the EU summit, of course, starting this evening and into tomorrow. Looks
like they're going to pull an all-nighter there. So, I mean,
which they've done often, actually, this year. PPC, one of the companies that has come under significant pressure. Is there any light at the end of the tunnel?
Well, it seems so, because the cementitious sales, if you're interested in these stocks, you must get hold of these. You can get them emailed to you once a month, and it shows you how many bags of cement have been sold. A lot of cement goes into the rural areas by people that are just improving their homes, but so far so good. It doesn't necessarily foretell a big recovery in the construction sector, but it's certainly one of those things you'd look at. And so far so good. The trend looks good. I think sales in this past month were kind of back at just about record levels for the last 3-4 years, so that's kind of noteworthy.
So would you buy then? Would you add? I know. Have you been selling out of PPC?
No, regrettably we are holding them. So they went to $50, then they fell to 23, which was understandably not very happy making for our clients. They're now back to 27, and so I think the theory is that now's the time they're starting to get out of the hole.
And of course, this is a good barometer with regards to what construction is going to be doing going forward.
Hopefully.
Weekly claims, jobless claims in the US up 381,000.
Well, my favorite economic indicator, I'm glad you mentioned that. That actually came before the EU thing and the ECB thing. So that's the number of people claiming jobless unemployment benefits. So anything below 400 is positive, and you know that that stat is the most strongly correlated with the S&P 500. So it's an indication that the unemployment situation is easing further in the US. And then we'll have to see if that carries through. So, I mean, I don't know. You know, we've been playing this game for so long, but, you know, we're now up our market 3% for the year. It would be great if we could hold on to that and finish December with, like, double figures. That'd make me happy.
Absolutely. We were a long way from double figures, and if we actually see some decisive action from the EU summit, then maybe we could actually see a significant update.
We've had two very negative episodes. The one was kind of August, September, and then we had another very negative episode in October, November this year, both of which I think we were down like 10%. So if we can close in the green after all that we've been through, I think we'd be happy just to book it and run out of town.
Fantastic. Thank you so much, Paul. Great to have you on the program.